So Goldman Sachs say that you should use the options market to book outsized profits on these stocks they believe to be underpriced. Their thesis is if there's a lot of options volume on a stock and yet it looks relatively cheap, then it could have upside potential. I'm not claiming they're no better than anybody else, but they're certainly paid big bucks. So let's see if they're up to it. Now, I've written if any of these are on my approved filtered list. My approved filtered list goes through valuation, revenue growth, dividend yields, cash flow, specifically cash return on capital invested, alpha, Sortino, a whole bunch of other factors, including momentum and volatility. So I'm a bit more stringent than, say, a Goldman's. But if I get somebody like a Goldman's or a Morgan Stanley or a Credit Suisse give me their names and they cross my desk, and a lot of stuff does cross my desk as hedge fund manager, then what happens is I'll ask the team, are any of these on my approved list? Because then that gives me an added dimension of things. Okay, so here we are. This is there. It's not on my approved list, so I won't be looking at it anytime soon. KBH, PVH, Snap, and you can see the share prices there as well. Okay. And this is what they're saying: buy the $34 calls, which recently traded at 45. So they're obviously expecting some short-term upside, and you can see where the price is now. You're buying 75 calls. They think those are cheap because you're buying the 75 calls at $4.60. The current price is 70. So obviously they expect it to go probably closer to $80, if not more, in the short term. I assume if we held it to expiry. They might just be expecting a short-term blip to the upside and wanting you to sell, but I'm assuming they want you to hold these to expiry. There's 75 calls at 10.60 when the price is at 67. They're expecting some significant upside on these if they're expecting you to hold to the upside, to the expiry. Lear Corporation, Arrowhead Pharmaceuticals, Marvel Technologies, General Motors. None of these are on my approved filtered list. By August, 125 calls, recently traded at 12.45. Now you can see, okay, these are pretty much at the money. Okay, this did make my approved list. 100 calls, 8.23. Again, you're looking at a significant price rise between now and then. However, it might be that Goldman's think, no, they are out of the money calls. They're relatively cheap at $8.23. Therefore, should the price rise even to 90 between now and then, there'll be so much time value within there which won't have eroded because we're only in April. That's all the way in July, and so you'll get an upside on the options. But that's assuming not holding to expiry and just trading it off the delta in the short term for those who are into options. Okta, not on the approved list. Ring Central, not on the approved. PayPal, not on the approved. Twilio, and there you go. Okay, so the only one which did make it was Advanced Micro Devices for my list. You can have a look. There's me. Campaignfor1million.com to get more free educational tools on investing. Hope you enjoy all of those tools, including being able to download some of the books that I've written, which are over my shoulder. 18 books, 8 languages, published by the Financial Times, Wiley, and so on. Which is what gave me these bloody big, fat, thick glasses. Now I can't see anything. Cheerio.